name is Kevin Cadet, and I'm the Executive Director of Black Angels Miami. And you have tuned into our Black Angels View series. And I'm so happy to be joined by Monique Woodard here with me today. And before introducing Monique, I just want to quickly introduce Black Angels Miami to anyone that's joined us for the first time. Black Angels Miami is a new and growing angel investment club here in Miami. And we focus on exposing individuals to spectacular early stage companies and high growth potential. And our goal is to diversify the landscape of angel investing. BAM itself is not a fund, and we don't make investments, but our members do. And I'd like to recognize the Knight Foundation that has been a great, amazing sponsor of BAM. And I'm supported, the organization supported by an amazing board, including Kimberly Marshall, Baron Channer, Charmel Maynard, and Dorothy Terrell. So as I said before, we're joined here by Monique Woodard, amazing investment professional from California. She spent her time in Miami, so we love her so much. And I don't know if you realize this, but you were one of the first investors I ever met when I was in Silicon Valley many years ago.
I heard that. That's what you told me. Do you want to tell everyone how we met originally?
It was in Mountain View at 500 Startups.
Yeah, exactly.
And, yeah.
You were a founder.
It seems like a long time ago. So much has happened since then.
Yeah, literally.
So I promised you I was going to, well, I'll let you introduce yourself before we get started.
Sure. So I'm Monique Woodard, and I'm based in San Francisco, but I definitely have a Miami connection. I grew up in Florida. I was born and raised in Ocala, Florida, and I went to University of Miami and lived in Miami for like 8 years. So I lived in Coral Gables, of course, Hialeah, and then South Beach at the end. So that's my Miami connection. And, you know, love Florida, love going back to Miami and to Central Florida. But I've been in San Francisco since 2008. I started my career in tech as a founder. I've been a founder twice. And once I got to San Francisco, I sort of noticed that there was very little diverse representation in technology. This is around, 2008 to 2010. And I was going to all these demo days and meeting other entrepreneurs. But, back then there were virtually no other Black entrepreneurs and very few Black women entrepreneurs. And so my friends and I got together and we started Black Founders, which is a community of founders. And through Black Founders, I started advising other founders on, everything from like how to build a pitch deck to how to do fundraising, how to go to market. And through that, I felt like I should probably be on the other side of the table in the investor seat. And so eventually I moved on to the other side of the table at 500 Startups. I was investing out of their seed fund. So did a bunch of deals like Blavity, Port Buddy, Silvernest, and then moved, also opened up their Sub-Saharan Africa investing in deal flow because they're very much global. And then once I decided to leave 500 Startups, I was sort of figuring out what I wanted to do and started doing some scout investing for Lightspeed, as well as starting to raise a new fund and consult with other large firms on their early stage strategy.
Wow.
And continuing to invest. I just did my most recent deal just after shelter in place started.
Perfect timing, right?
Yeah, exactly.
So I promised you a question you haven't asked before. So if I had a time machine and I picked you up in January and I put you today and you didn't know anything about, what has happened in the last couple of months, what, as an investor and doing your day to day, and let's just say you just couldn't leave the house, you didn't know what was happening, what would be the first thing will make you pause and wonder what's happening? Like, what would be the one thing that changed in your day to day outside of, the news and going outside and Zoom?
Yeah. I would say the one thing that would make me know that something was amiss would be the fact that I would be waking up at home as opposed to waking up somewhere in some other city or country. Before all this happened, I was traveling just so much. I was in Russia in November and December, and had been in Florida uh, I was in Florida in December and January. I think traveling and going out and meeting entrepreneurs and, getting out there was always a really big part of my process and part of my getting to know founders. And so, I think I've had to, over the last few months, figure out new ways to get to know founders and without all the travel that I would normally be doing.
Right.
So yeah, I would say the fact that I'm waking up at home is a big signal.
Gotcha. So you just said the landscape of investing has shifted, just like so much of most of the elements of our day-to-day lives. Overall, would you say that now is a good time to be an investor?
I think I take a very positive view on the investing landscape. And so I think just about any time is a good time to be an investor. You just have to decide how you're going to behave in that one particular time. And so I think today is still a really good time to be an investor. People are still starting companies. I think entrepreneurs are more innovative than even before COVID times. I've seen entrepreneurs that I've invested in sort of quickly figure out what they need to be doing right now in this moment. And I think hardship and strange circumstances bring out the best in true entrepreneurs. And so being able to see that and watch that and invest in that was really special. So now's a really special time, and there are going to be some amazing things that come out of it, even despite all of the very real and terrible things that are happening right now.
Right. So the question I get a lot, and I'm sure for entrepreneurs, founders, and for investors, and especially those that are new to investing, have valuations shifted during the pandemic?
I think a number of I would say, let's call it Series A, B, and C investors were waiting to figure out whether valuations were going to, go down or be reduced significantly. I really haven't seen, especially at seed stage, at seed and pre-seed, I haven't seen any significant downturn in valuations or in convertible note caps. So I think what we're going to see is I think we're going to see the numbers hold, and investors are very quickly sort of adapting to what is the new normal.
Gotcha. And so overall, how has your thesis changed in light of COVID-19 for investing?
It hasn't changed dramatically. So my thesis is all around investing in areas of demographic change. And so for me, those three areas of demographic change are, the 10,000 baby boomers turning 65 every single day, our rapidly aging population. That still holds, it's still happening. The second area that I invest in is companies that can get to billion-dollar outcomes based on the economic activity of women. That is still, holding, that has not changed. And the third is this shift to majority minority, where people of color will become the majority in the United States. And if you're building a global company, are already the majority. And so those three things have not changed dramatically since COVID. And I don't anticipate them changing over the next, very long while. And so what has changed is what I'm looking for when I'm talking to a company. And it's, are you relevant in this current COVID place that we're in? And do you understand what customers want now versus what they're going to want 9 months from now? A company that thought they had product market fit pre-COVID, they need to reevaluate whether they have product market fit during and post-COVID. And so if they have not found product market fit, it's trying to help them understand, like, what does product market fit look like now? And then, the other thing I'm obviously, more aware of, there's a heightened awareness of how much money you have in the bank as a company, and what your burn rate is, and whether you're at the right burn rate for this current time period where investing might end up being a little bit choppy. And whether you can weather the storm through COVID to a better investing climate.
Gotcha. So you just talked through a lot of what your expectations of what you're looking for from a company as far as dealing and moving on with at this current time. How about the founders themselves? Are you looking for anything new which you were not looking at before from the actual founders of the companies?
I've always looked for really resilient founders, right? Because, starting a startup is, you're guaranteed to get punched in the mouth at some point. And so I'm looking for founders who have had that experience and been able to sort of pick themselves up and dust themselves off and get back to business. And so I really optimize for founders who can show me times when they have had to rethink what they're doing, to think on their feet, to think rapidly about how to continue growing their company under less than ideal circumstances. So founder resiliency is always something that I've been very keen on, and really, look to see that like glimmer of resiliency in a founder.
And the stage, what stage of companies are you primarily looking at?
I primarily invest in pre-seed and seed stage companies. So, I of course really love seed stage companies where I feel like they've found some level of product market fit, but I'm also become really good at identifying founder talent early. So have certainly done investments into companies at pre-seed. And I also like sort of seed plus or seed extensions, that time period right before an A. So I like to think of it as like the seed spectrum. And that's really where I like to live, is in that entire seed spectrum from pre-seed to seed plus.
So for how much traction, well, pre-seed by definition is not much traction. So, I think you've talked about the type of founder, the grit, what they've displayed in the past.
Yeah.
Beyond having a great founder, what does that founder need to show you at that very early stage for you to say, I believe in what you're doing, and open up that checkbook?
Yeah, well, let me be clear. Pre-seed doesn't mean that you don't have a product, right? I like companies that have a product that they've already gone to market with and have some sort of like customer and validation data. That doesn't mean that I expect you to have completely figured out product market fit, but I like to understand that they figured out something about the customer that they are focusing on, that they've figured out something about the market or something about the customer that hopefully no one else knows, right? And that they are uniquely suited to build for. I do like when companies are making some money. I like revenue. So I like revenue producing startups if that is, if it's not something that's in social or some other adjacent category. So, to say that I like pre-seed doesn't mean that I like, companies that haven't proven a few things. I do like for them to have proven a few things. And a lot of those proof points are in numbers of users, ability to figure out their sales funnel, some revenue, there are lots of proof points that you can look at, even in an very early stage company, to say, okay, this is working, isn't working, could be a big outcome for us.
Gotcha. So have you, in the recent past, invested in any companies that are pre-revenue? May have, MVP, but haven't really gone to market in any significant way?
I invested in a direct-to-consumer jewelry company last year called Gymist. And when I invested, Madeline had not launched she had not launched full sales yet, but she was doing sort of these in-home test sales. So testing jewelry parties. And so I was able to see her do a jewelry party and understand like how engaged that customer was with her and her story and the product. And that got me over the hump of not necessarily having as much direct sales and revenue data, but having an understanding of what the customer is looking for, that there was a customer base for this product, and that Madeline as a founder was able to tap into that customer base. And she's doing really well now, has raised even more money, and continuing to grow the business.
So would I be correct in saying revenues are not required, but some type of market validation, i.e. getting in front of customers, whether you're making money or not, but getting that feedback is key?
Exactly. Some sort of market validation that lets me know that there's some there. You know what I mean? So that could be early beta test users. That could be an early pilot if you're selling into another business. It could be a few different things, but anything that lets me know that there is something there, and that I like to say someone other than like your parents are buying this.
Right. For angel investors versus VCs at this time, has there been any significant difference in how they've reacted?
The angel investors that I know have not really shied away from doing new deals. A lot of the angel investors are obviously going to be investing fairly early in pre-seed, or even let's call it a friends and family round. And so I'm seeing a lot of angel investors continuing to put the foot on the gas with investments. And I think, that's the right strategy to have. I mean, Warren Buffett said, when people are greedy, be fearful. And when people are fearful, be greedy. Right. So if we're going by that adage, we should be investing. And at the same time, there have certainly been some, larger venture capital firms who, for a moment, waited to see what the market was going to do, waited to understand where valuations were going. And I think that was the right decision for them. And I think, on the angel side, that's a very personal decision, because you are investing your personal capital. And, you understand your level of risk tolerance. And on the venture capital side, that was the right decision for them, because they are stewards of LP capital, and they need to make the right decisions for themselves as well as their LPs. And so now I think we are at a point where things have stabilized quite a bit, and where a lot of venture firms have figured out ways to get to a level of comfortability with a founder or with a company solely via Zoom. And they are back in doing those new deals. I mean, I saw on Twitter today a founder who just raised a Series E via Zoom. So I'm excited to see things like that happening. It's a good signal for the market.
Yeah. So for your deal flow, before you said you were traveling a lot, to say the least. Yeah. You even said Russia. So I don't know was that for fun, or is that, hey, there's a startup in Russia I need to talk to?
It was for work. I was meeting founders in Russia, and I was spending some time with my 500 startups friends, and yeah, helping to mentor a batch that they were doing in Russia, and also some fun.
So how do you find your funders? I mean, your founders in general?
Yeah. So, you know, that's deal flow, right? So how do you get deal flow? And so I've obviously been in the tech industry and in the venture capital industry for quite some time. So I have built-in deal flow. But a lot of the ways that I get that deal flow has been from traveling, from speaking at conferences, from going to events, and from being highly visible in places that are outside of Silicon Valley. Because, you know, being able to reach into places that are not necessarily Silicon Valley, everywhere from New Orleans to Albuquerque, New York City, LA. That's really important to me, to be able to see deals that not everybody is seeing. Now that we can't travel, that obviously posed, you know, a bit of a challenge. But that's where I started to lean into my relationships and the relationships that I've built over time. So I built a lot of relationships with later stage funds, and have been advising those later stage funds on their interactions with early stage founders, as well as underrepresented founders. I'm working closely with SoftBank on their current Emerge Accelerator. And so that's giving me a lot of opportunity to, one, get to know founders that I didn't know before, and two, spend a longer period of time getting to know them and their businesses than I would get if they just sort of introduced themselves to me and, you know, we started this relationship via Zoom 1 week, right? And so it's ways to kind of hack your deal flow and figure out ways to get the best founders in front of you and to get in front of the best founders. So that's always really important, to constantly be refining your access to founders and your access to deals. And now that we are not really traveling as much, and I don't expect a lot of travel to come back until next year, to be quite honest. I think people who need deal flow and who depend on deal flow need to do a much better job of leaning into their relationships that they've already built with other people who are also doing deals. Maybe they're doing deals that are more later stage deals, and so, but they also have early stage deal flow. And you can say, okay, show me the deals that are too early for you, but might be right for me, right? And being able to really use those relationships that you've built over time in order to continue to keep, your pipeline really strong and really relevant.
So what about that great founder or opportunity that you don't know, that doesn't know you, that isn't tapped into your network, which is potentially watching right now? How do founders find you?
Yeah,
or any other investor? Like how do you break that glass, if it is glass?
I'm on Twitter. I spend a fair amount of time on Twitter. Tweeting is always a good way to get in front of investors, and being active on Twitter is great. I answer cold emails. I know a lot of venture capital investors don't answer cold emails, or they prefer a warm introduction. I do answer cold emails when the email is targeted to me and has relevant information in it, right? And so I think there's an art and a science to writing a good cold email that will get you answered, and being able to generate excitement through that email, whether it's talking about one, understanding what I do invest in and what I don't invest in is the number one thing. And you need to be able to do this with every investor that you reach out to, whether cold or warm. So if you were pitching me like a biotech company, that's not going to be a fit for me. And so understanding what I've invested in and what my philosophy and my thought process on investing is the first step. And then two, being really concise. People have even more limited time now, like in this shelter in place pandemic lifestyle that we're under. So being able to get to a point really quickly and make that email concise and clear. And then three, being able to, even sharing early metrics, being able to share like some nugget of data that is going to be interesting. So if you said to me, we've grown 300% since COVID started. That's really interesting, right? I'd be like, what is that about? Why have you grown that much? And so being able to like give a nugget like that grabs someone's interest and says, let me email this person back and let's have a conversation.
So it sounds like your email is out there for people to find, or how do people find your email? And if it's not your email, like other investors, like how do they?
They can go to my website and they can email me from there. It's monique.vc.
Okay.
So it's super easy to find.
Super easy, right? And do you? Well, I guess that's great. Now, for the angel investors that are looking for deal flow, and what's your advice to them? Because people aren't looking for them. They want to put their capital to work. They're not going to be getting cold emails. They're here trying to figure out how to get involved.
People are definitely looking for angels, first of all. I mean, certainly a lot of very early companies should be looking for angels, because those are the people who are most likely to invest in, let's call it your friends and family plus round, right? It's unlikely that you would have, an institutional venture capitalist investing that early. So people are certainly looking for angels. Whether you can be found is another point. And so good ways to get found as an angel are being really vocal and really active. If you're investing locally, being really active in angel groups like Black Angels Miami. If you are investing, nationally, making sure that you have presence in all the places that you should have presence. So for instance, talking about what you like to invest in on Twitter is always a good way to sort of create a voice and create your own deal flow and get people really interested in what you have to say. I also think, looking at doing angel list syndicates or having a presence on angel list is still really good. Angel list as a platform has been around for a really long time, but I think, founders still go to it to see who's investing in what and what people are interested in. And then, also, of course, angels can also invest in other funds and get deal flow in that way. So being able to really diversify your access to founders and your access to deals is how you'll set yourself apart as an angel investor.
Can you talk to funds? I don't know I think people hear the word funds, but what they really are and how they actually work, I think, people don't really talk about in detail. And not say we've got to spend an hour on it, but could you introduce and put a framework for people to think about how they should be approaching funds from an investment and potentially as an entrepreneur looking for money as well?
Sure. So a venture fund is basically a financial vehicle with usually it's a 10-year lifetime, and each fund has a set of LPs, a set of limited partners. And limited partners are the people who invest in funds. And so they can be individuals, so accredited investors who might also do direct deals, but might also want access to a fund manager's, portfolio of investments. So you can do both. You can do direct investments and you can invest in funds. It's made up of other LPs like university endowments, insurance companies, fund of funds, family offices. And all of these people make up your LP base. So these are the people who invest in, so I'm starting a fund called Cake Ventures. These people invest in my fund, and then I go out and invest in founders and in companies. Yeah, I feel like that's the most basic, floor level explanation of funds.
So for Cake Ventures, it sounds like you're really busy, which I'm sure you are. But if it's so, you're an angel and you run a fund. Did I say that correctly?
I've been an angel investor, and now I'm a venture capital investor raising a new fund.
Okay.
Yeah.
So the investments you've done.
I was an angel, moved on to the VC side of the table
Right.
at 500 startups,
Yep.
left 500 startups to start a new fund called Cake.
Okay. So all of your investments right now are through Cake. I guess that's what I was.
My last investment was through Lightspeed Venture Partners Scout Fund. So Lightspeed is a large VC fund here. I did some Scout deals for them.
Okay. So you're an LP in other funds as well?
I'm not an LP in any funds.
Okay. So Cake. Okay.
Cake is the main thing.
Cake is the main thing. And for Cake, you are, so a lot of funds out there don't necessarily do seed. So I guess Cake is a little different.
I'm sorry, you said a lot of the funds don't necessarily.
A lot of funds do not invest at the seed stage.
There are actually quite a number of seed stage funds out there now. There's this whole new era of micro funds and operator run funds that are rising up, who do a ton of seed investing. I would say over the last decade, seed investing has become even more popular than before. And so there are quite a few seed funds out there now.
Okay.
Which is nice because it gives us a lot of someones to co-invest with.
Yeah, that was actually going to be my next question. So is it typical for you to co-invest? Do you typically lead, or generally funds and different entities investing together? Because that's multiple questions.
Yeah, that is multiple questions. So I do not get super prescriptive about leading. Usually I am investing as, part of, a loose syndicate of, and I'm using the word syndicate loosely, not meaning angel-less syndicate. I just mean a loose collection of other funds that are also investing into a round. So I know that you had Marlon Nichols on a few weeks ago, maybe, and Marlon and I have invested together. We're both in, we're in Contos Media together, which is a kids multicultural media brand. And we're also in Blavity, which is a media platform for Black millennials. I think that's the only one. Those are the two that we've done together. So there are certainly people that I like to invest with. I love Marlon and like what he's doing at Mac Venture Capital. And I have a lot of deep relationships with other investors, like Charles over at Precursor Ventures is great. I know Brianne over at her new venture capital shop. So, having those relationships is really great to be able to understand who's able to invest at a similar or just slightly larger check size than you, and who you might want to have on the cap table with you. And so those two things are always really valuable and really good to figure out who you can get to collaborate with you on getting deals done.
Okay. So you mentioned the word syndicate. Just want to be clear for everyone online. Maybe you could talk about, define what a syndicate is. And I think there's a number of different types of syndicates, syndicates from, fund level to angels, or you could talk about.
So I've used syndicate in two different ways, which can be confusing. So especially for new people, sorry. Let's say that a founder is raising a $2 million round, and I'm going to put in $100,000, and there are other investors also putting in six-figure checks, and so that in and of itself is a syndicate of investors. right? All working together on getting this $2 million round done. There's also an AngelList syndicate. AngelList is a platform for angels, obviously. And they have a product called a syndicate. And so you can syndicate individual deals on that platform and find both outside investors and bring other investors along with you into deals that you run on that platform.
So obviously for that platform, AngelList actually runs the syndicate or manages the syndicate. For the syndicates you typically join, is it the larger funds that manage the syndicate, and then you join? Like, who typically manages the syndicate?
Those are just deals, right? So those are just deals. It'll
Right.
be convertible note. Usually it'll be a convertible note, and it'll be a $2 million fundraise. And if there is no lead, there's no one really managing, right?
So for those, you're writing individual checks.
Is the founder themselves.
Right, you're writing each of those individual entities are writing checks directly to the founder or the company.
The company.
Now, for angels that may be joining a syndicate of angels, where a company doesn't want to deal with all the individual angels, they can create a special vehicle, and that's also called a syndicate as well, a syndicate of angels, right? So just to make sure everyone's fully confused. So how does that work when we get down to the angel level, where not everyone's writing six-figure checks, but they're getting involved and not writing a check directly to the company?
Yeah, I mean, obviously, well, there has to be a person who is managing that process, right, and managing the syndicate on AngelList. And so that person sort of, AngelList manages the back end and all the legal stuff. And then the other person manages the relationship between the founder and the syndicate that exists in the background.
Right. Right. Okay. So how should angels be thinking about investing for long-term success? There are multiple, we've talked through a number of different ways to invest. So, I mean, you can literally, be boisterous, be out there, be known, people approach you, and you basically lone wolf and make relationships. But basically, this is something you put a lot of time and energy into, and you're an angel that way. And that's how you get your deal flow. But, let's say you're not, you want to be an angel investor, but it's not your 9 to 5. This is what I'm doing all day, every day. But I want to put my capital to work as an angel investor. I mean, there's funds, there's syndicates, there's groups like Black Angels Miami. How should an angel think about moving forward?
Yeah, I think you have to, as an angel, understand why you're investing and how much time and effort you want it to take, right? So why are you investing? Are you investing because you want to see returns? That's that's number one reason. But
it's not the only one.
It's not the only one.
Right.
Are you investing because you want to support the ecosystem, right? And I say the ecosystem, it could be you want to support companies that are based in Miami. You want to support companies led by underrepresented founders. You want to support companies led by women. You want to support companies led by women of color. There are many different ways to support the ecosystem, the entrepreneurial ecosystem. So you have to figure out what is your why, and how do you best answer your why and get to whatever success means for you. And then 2, decide how much time you want to spend on investing. If your time is limited, you probably won't be able to go out and meet companies, do even a minor level of diligence, and really manage those investments well. So deciding that, okay, I can't do all of this on my own. Maybe I want to join an angel group so I can, have other thought partners next to me, like joining Black Angels Miami and saying, okay, now we are now a group of angels. That gives me a group of thought partners who can help me think through our strategy, or help multiply our deal flow by the numbers of people that we're actually able to see. Or you might say, look, Monique has a really great thesis around the aging market. I know that's a really good market, but I have no access to deals that speak to that. Maybe I should invest in that fund and get access to those companies as they get de-risked. I hate that word because there is no real de-risking.
No de-risking.
Get de-risked as those investments mature, right? And so I think you have to figure out what your level of risk tolerance is, what your level of access to entrepreneurs and founders is, and how much time you really want to spend on doing this.
Yeah, I think that's a key one there, time, right?
Everyone's time crunched these days.
Everyone's time crunched. I feel like I've got all the time I bought has been soaked up by two very small people that said, "Oh, you got a little bit more time? It's all mine."
I'm surprised they haven't interrupted you yet.
Actually, it's the first time. Don't jinx it. Don't jinx it. You're gonna see. You're gonna get my daughter on screen. Maybe my wife took him out, but it's actually very quiet. It's a little scary. How about say? It's been great. Would you like to say? Well, first, we've had a number of people join since we started. So you are on Black Angels U. My name is Kevin Cadet. I'm the executive director of Black Angels Miami, and we're joined by Monique Woodard, founder of Cake Ventures, venture capital investor. And we've been talking about angel investing in the time of COVID-19. Would you like to say anything before we open it up to questions?
No, I think I've said, I've said a lot.
You have said quite a bit. And it's all been great.
This is the most I've done all week because I live alone. So.
Well, hey, this is just a timeout where you get to know your bed again before you get back to traveling. So you'll be missing these days soon enough. People are like, oh man, I wish I was in my own bed and my fancy chair. So a couple of questions here. Which side of the table do you prefer, founder or investor? That's a good question.
I will say, I'll go ahead and say investor side of the table, but I'll say that with one caveat. Starting a fund is the most entrepreneurial thing that you can do as a venture capital investor. And not everybody decides to do it because it's super hard. And so even though I consider myself an investor and a venture capital investor, starting a fund is highly entrepreneurial. And so I still definitely have that entrepreneurial gene and that entrepreneurial bug and desire to build something. And so I'm definitely a builder and an entrepreneur. I'm just doing it in a different capacity. I'm building a new fund. And so, yes, investor is the answer, but.
But. I understand.
An entrepreneur investor.
There you go. You're definitely building. It's a good question. What advice do you have for founders in vetting a good angel investor? Because it works both ways, right?
It does. I definitely encourage founders to ask questions about not just angel investors, but also venture capital investors. Right. Ask to speak to a founder in their portfolio who they know and have invested in. And you'll get a really good sense of what that person is like to work with. I think sometimes, unfortunately, founders, need the money so much and need to fundraise. And they feel like they don't have a lot of options at times, and so that leads to them taking money from people that they wouldn't normally want to work with. But I like to say that all money isn't good money, and understanding who you're partnering with is incredibly important. And understanding, is that angel investor going to try to take more of my company than is industry standard? Is that angel investor, are they able to help me get to whatever the next stage is? And there are some angel investors who will be really good about helping you get to the next stage, and there will some angel investors who are like, listen, I'm just a check, and I'm my value is in giving capital, and those are perfectly fine people to have on your cap table as well. So I would say, ask a lot of questions, do a lot of back channeling. If you know someone who has worked with that angel investor before, has taken money from them before, that is definitely the best advice, and the best reference to get.
Yeah, I know from my personal experience as a founder, I think the first time I pitched to a venture capitalist is 98, just to age myself. For years, it was more of, please write a check, please write a check. It's a transaction. I need a check. I need to get going. I need to build something. I need money. That's it. But that's a mistake. I mean, obviously, if you're on fumes and you're desperate and it's like the end of the world and you need that check, understood. But people like yourself, other investors, one conversation, one relationship, and it is truly a relationship, can make or break a company. Can take you to a whole new level because of the leverage you get by having a great relationship with someone who has industry experience, relationships, etc., which you can leverage, which you don't have yet. So yeah, absolutely, it's not a transaction, or it's not a simple transaction at all.
Yeah, and getting angels early on who have experience in your particular area, your focus area. So if you're starting a healthcare startup, getting healthcare focused angel investors on your cap table is a way to really kind of accelerate your understanding of the market and your understanding of how to best create that business.
Yeah. Let's see, got a few more questions here. So within your thesis and the areas you're looking at, so let's say baby boomers, for example, I think you hit on the head with 10,000 a day retiring. Are there any industries that within what you're looking at which you're particularly excited at this time?
Yeah, that's a question from my friend Aori. Thank you for joining. So she mentions VR and AR. I'm not super knowledgeable about those spaces, so those are not spaces that I tend to invest in a lot. I like consumer. I like marketplaces. So I like direct to consumer. For instance, the company that I mentioned, Gemist, which is a jewelry brand, but I also invested in a company called FemPatch, which is creating a wearable patch that relieves symptoms of menopause. Again, going back to that aging market. I also, I like marketplaces. I invested in Silvernest, which is basically Airbnb for seniors, helping people find like-aged roommates as they get older so that they can share housing and stay in their homes longer and not have to go into a nursing home. So those are all areas that I really like. So I think this sort of, but to specifically talk about COVID and post-COVID, I think that e-commerce is going to be accelerating rapidly over the next, I mean, it's already accelerated rapidly over the last few months with people who are not typically buying things, even down to like buying groceries online. People who were not doing that and exhibiting that behavior, now they are more apt to buy things online beyond even the Amazons of the world, right? And so I think online grocery delivery is one area that that I'm really interested in. E-commerce remains an area that I'm always looking at, and things that create the backbone of e-commerce and of delivery systems. So anything that touches logistics. Shopify just became more valuable than IBM. So I think any of those things that are technically a B2B company, but touch direct to consumer and e-commerce are really interesting spaces for me.
Gotcha. What advice would you have for a Black African-American founder living in Europe? Or as I've seen quite a few international questions here. Looking to seek investment and, in an environment even more, I'd say, hostile than the US. What advice would you have for people, not necessarily here, that are looking for funding?
Yeah. So I would say it depends on where in Europe, right? I would say like pitching VCs in London is very different from pitching VCs in Lisbon or pitching VCs in Barcelona. So all of those things are very different. But I would say, I think the biggest thing I would say is don't feel confined by the borders of whatever country you are in. I see a lot more activity, a lot more cross-border activity in Europe than in anywhere else because it is so easy to travel between countries. And so if you are in France, it may make just as much sense to fundraise in Germany or the UK. And so don't feel as though you have to be confined to that country. And I don't know that the European environment is more hostile than the United States. I mean, the last few days in the United States haven't been any easy time for us. So I would say that it's hard everywhere, but you certainly have people who are willing to invest and are willing to invest in Black founders. I think that now that a lot of us are doing things online, that gives a lot of founders, even in Europe or in other countries, the opportunity to connect more deeply with VCs and angels who are in the United States or are in Canada or somewhere else other than the country that you actually live in. Now, is investing in Europe or investing, outside of the United States part of their fund thesis? That's the thing that you're going to have to figure out. Some people will not have investing internationally as part of their investment thesis, and it doesn't make a difference, the fact that you can get in front of them. But other people will take a much more international viewpoint, and the fact that you are now able to connect to them on Zoom and they don't have to actually fly to Germany to meet you is a benefit. So figure out who those investors are, and then use the fact that we are actually, accelerating our Zoom time to your advantage.
So there are a couple of questions about your fund. I guess people want to know more. So, how you're structured, what are criteria to join? Do I need to be a billionaire?
You do need to be an accredited investor to invest in funds. And so, I don't want to run afoul of SEC solicitation rules. So you should definitely feel free to reach out to me one-to-one. And my email is hello@monique.vc, or just go to monique.vc and send me an email. And I'm happy to talk one-on-one about fund construction and how you can invest and whether you're accredited or not and all that good stuff.
I think maybe we could have a follow-up meeting for accredited investors.
Yeah.
That would make your life, and I think, be a little bit more efficient. So for the accredited investors on the line, stay tuned for that. We'll definitely reach out. Oh, I shouldn't. The chat's got loads of questions. Let me see. It's an interesting one. Can you tell us? So, as you said, you're working with a lot of portfolio companies you've already invested in. What's the best pivot story or pivot a company you've seen do over the last couple of months?
I've been really lucky that none of the companies in my portfolio have had to completely pivot. I mean, I'm a software investor, right? And so I think I know that I saw a lot of investors investing in very physical location heavy companies. And traditionally, that has just not been an area that I invest in. I tend to not like startups with a lot of real estate risk. And so, a lot of my companies were pure software companies, pure media companies. But one of those companies, Encantos, they were partners with Nickelodeon, and they have a line of early education tools and toys for multicultural kids. So think of a nursery rhyme book in both Spanish and English, and travel books that talk about traveling to places like India and Nigeria and China, places that, traditional kids books don't really talk about. And so one of the things that Encantos was able to do really quickly is to ramp up their online learning resources for kids, knowing that kids would be not able to go to school, be at home, and parents would be looking for educational opportunities. And so it was less about a pivot and more about taking something that was on the product roadmap and rapidly executing so that they could move it up and find some success in, a very new and current online learning platform. So super proud of them and how well they've been executing.
That's great. I've got an interesting question here, and I think this is specific, but it goes to the angels out there that are addressing a market which is huge and you're probably small. So for this question, it's some of a medical unit geared towards the NFL and NBA to bring patrons back to stadiums, right? Have no prototype, have no proof of concept. Would you approach leagues directly or go the angel investor route? So this is pre-MVP. I hear a lot. I've got something which addresses a big market, and you're an individual founder.
So my question is, are we talking about addressing the leagues to come in as investors versus going the angel investor route, or approaching the leagues as customers? One, I think approaching the leagues as customers right now is a really good strategy because they have a lot of time on their hands. And they are very concerned about how to get people back into the stadium once we're actually able to do that. And so if you have something that can do that, I think they are more willing to talk now than ever before.
So,
however, I would say that having some sort of minimum viable product is better than having nothing, just an idea and some talking points. Don't feel as though you have to have like a perfect product, but you do have to have something that can show that you can build something. And so I would spend the majority of your time figuring out the minimum viable product that you can build, and then start putting it in front of the leagues. Go ahead, sorry.
So I think because of this crisis, I mean, and it's said a lot of new, innovative, there's opportunities, right? Because there's a lot of issues or challenges which need to be addressed, and that's possibility for new innovative things. Now, approaching any big entity, let's say, as you said, approaching them to possibly finance what you're trying to do because it addresses them directly. Where do you start? Like, what department do you even start to try to go to?
Well, I'm saying approach them as customers. So the best investment is actually a customer.
All right. Yeah. Yes.
The best way to get money into your company is to make something and then sell it.
Sell it. Right.
Yeah. So the best investment is actually getting a new customer. And so I actually think they should be focusing on, if they are going to go into the league, they should focus on getting them to buy whatever they've actually created. And where do you start? I am not the person to answer anything about like the NFL. I'm just like, yeah.
Yeah. I mean, I think
in general.
Business development, procurement of all leagues or any large entity, that's a whole nother webinar, right? Or two or three or four. If we could summarize that in 2 minutes, then the world would be a better place. Let me see if there's one last question. If you got one really good question, now is the time for put into chat, or maybe there's a question you want to answer within the Q&A. I think this is a good one because I hear this one a lot. One of my greatest fears is someone ignoring me, stealing my idea and running with it. And I'm sure you probably have people wanting you to sign NDAs and everything else. And then 2 years later, I see my product on the world stage. Are there any methods of preventing this, or then researching conflict of interest and keeping things out of the pitch while retaining what we do?
Yeah, this is something that founders worry about a lot. Yeah. And I'm not saying that worry is unfounded, but it happens a lot less than you would think, especially within professional investor circles. What I will say is that venture capital investors typically, I'm speaking typically, do not sign NDAs. It would have to be something like you would have to be building a new rocket to like rival Elon Musk. It would have to be like that level of IP, right? And so a typical software company is not something that any of us is going to sign an NDA to talk about or see or discuss with you. But addressing that fear of, someone stealing your idea, certainly that could happen with, if you went out to a bunch of angels or a bunch of like just wealthy people, they might say, yes, that sounds like something I could do, and then you end up seeing it. It happens a lot less often. So what I would say is, if there are like trade secrets in your pitch deck, or you have trade secrets around this product that you're building, those are things that you don't have to talk about with everyone. I would say don't necessarily put all of your financial projections or all of your information about your customer acquisition strategy, your LTV and your CAC in your pitch deck. Save those conversations for when you determine that a person is really serious and this has started to move down the road of you're about to get a check, right? So those are when you should save those conversations, because when you build a pitch deck and you start to send it to people, yes, it absolutely does end up getting out there, and other people see it. And so you have to get really comfortable with that sort of thing. But most of the time, I would say that does not happen as often as you would think that it does. Professional investors are here to invest money into companies and invest money to founders, not go out and run companies.
Well, Monique, I absolutely appreciate you spending this time with us, sharing your knowledge and experience and what you're doing now. I see there's a number of people that would love to get in contact with you. And if you missed what we said earlier, Monique is very open to cold emails, and she could be reached through her website at monique.vc. So could not get any easier. So this is not an issue with not being able to contact Monique.
Exactly.
For all those founders out there. And for all the accredited investors out there, if you've been receiving emails from BAM, then you will receive an email about an upcoming meeting with Monique to talk about her venture fund. If you have not received emails from Black Angels Miami, we do not know who you are. You can reach me at kevin@blackangels.miami. You can reach us through our website, through contact us. You can reach us direct messages on Twitter, Facebook, LinkedIn. It's not hard to reach myself or the organization. So I hope this has been a great informative webinar. And again, Monique, thank you so much.
No, I appreciate everyone coming out and listening, and all the great questions that we had today. So thank you so much. It's been a pleasure.
It's been a pleasure, absolutely. And I just got one chat saying, what's my email again? It's Kevin. My name is Kevin Cadet, but my email is kevin@blackangels.miami. Couldn't be easier. Thank you all. Hope everyone has a good night. Bye-bye.